How important is your credit when it comes to buying a home? Watch this video and find out. All right, this is Saint-Gerard with Keller Williams Realty Landmark, and we got a special guest today, Chris Kinslow of VP Credit Repair. Chris, tell us a little bit about yourself. How long have you been in the business?
Yes, my name's Chris Kinslow. I'm the CFO of VP Credit Repair. The company's been officially open since 2004. And what we do is we help people increase their credit score to be able to get cars, houses, credit cards, and just in general getting better rates on loans.
What's the number one thing they should do before they purchase a house?
The first thing that you should do is you should look at your credit yourself. There are pay credit monitoring sites, and then there are free credit monitoring sites. A free credit monitoring site that you can look at your information that's on your credit report now is Credit Karma. It has flaws, and online they get bad reviews from some people who don't actually understand what they're looking at. When you go to Credit Karma, you're going to get a Vantage 3.0 score. Vantage 3.0 scores are used more for credit card decisions than home loans. If you're going to get a home loan, you're going to get it. They're going to be looking at what's called a FICO score, which is produced by Fair Isaac Corporation. The credit bureaus own the information, but Fair Isaac uses their formula as basically a risk model. The higher your score, the less of a risk you are. And as a buyer, as somebody who's going to get a loan, you want a higher score. The higher score, the lower the interest rate that you're going to pay, and also the lower down payment that you can pay. And things vary depending on which bank you use. But what you want to do is you want to make yourself look good, as good as possible when you go to get a loan. You want your score up as high as can be. So what you should do is look on your credit report and see if there's any inaccurate information, if there's any late payments that that you're on time, if there are any collections that shouldn't be reporting. There's a lot of inaccurate information that goes on credit reports. I heard a thing where 1 in 4 people have errors on their credit report. So you really want to make sure that the information that's on your credit report is accurate.
All right, that's a good point. Now, question, how often should someone be checking their credit report?
If you're going to buy a house, you should look at it once a month. I mean, people get obsessed and actually look at it daily, but if you're going to buy a house, look at it once a month. But just start off, look at your credit report, and then if you do warrant getting a loan, or you are going to look for a house very soon, go to a mortgage broker or mortgage banker to then go get pre-approved, because you really want to be pre-approved before you actually go look at properties, because everything takes time in the mortgage industry. So you want to be ready to go, so that you don't offer up. You don't make an offer on a house and they take another offer because you're not pre-approved.
Well, nowadays, especially through the COVID era, a lot of the sellers are requesting a pre-approval before they even make an appointment to show their property. So they're asking for a pre-approval and also COVID disclosures before they can for the buyer to actually come to the house. And they're doing the same thing a lot of people are doing the same thing for open houses. So it's not the same situation that we had a few months ago before COVID. That being said, let's say there are some things that are on the credit report that might not be for that buyer. It might show up that they're late on certain things, but they are current. How do they fight that? And do they hire you? Can they do themselves? Walk us through the process.
Yeah, you could always dispute items on your credit report yourself. It's one of those things where everybody has the legal right to do it. Obviously having more experience doing it and knowing the wording that works better, that's why we do it. But anybody can dispute it themselves.
Is it a lengthy process?
The credit bureaus and the creditors have 30 days legally to respond to disputes. So basically, you can do a lot with your credit report, but you can do almost nothing immediately. I've heard of people saying that, oh my God, I'm closing in 30 days, I need this done. And you can almost do nothing in 30 days. Even if you pay off a credit card balance, you're not even guaranteed that that's going to update on your credit report within 30 days. I mean, there's different variations where you can rapid rescore. But in general, it takes time, and that's why you want to do it as fast as possible.
Well, based on what you're saying, it sounds like you definitely need a professional who knows what they're doing, who does this on a regular basis, and this is their full-time job, that they can handle this while you can go focus on other things like making your payments on time and everything else, and focus on getting your home, and let the professional worry about getting your credit fixed and upgraded and whatnot.
I mean, it definitely helps. And it's not only about getting negatives off. It's also about making sure that your balances are paid down. A lot of people gloss over that. Your utilization ratio accounts for a large percentage of your credit score, and people don't realize that maxed out credit cards really hurt their credit score. You never want to be over 30% on your credit cards as far as available balance. So what that means is, say you have $1,000 credit limit, you never want to be above $300 on your statement balance, and really you want to be in the 7 to 10% range on it. And that's a lot of points where people can, all you have to do is just maintain financial stability on your end, and be disciplined and not use your credit cards when you're going to get a house. When you're going to get a house, that should be the most important thing, and that is basically job one, is you getting a house. It's not buying a new car. It's not getting furniture.
I'm glad you mentioned that. A lot of times people get a house, they get excited, and they're like, we're getting a house, our offer got accepted, we're in the mortgage process, and they make the mistake, and we stress this a lot, and I'm glad you pointed this out. Do not buy items such as furniture or anything. Pay your bills on time, continue doing that. But those items that you want to buy to put inside the house, wait till after you get the keys and after the closing and you get the keys. Or if you have friends and family, maybe they can give you those items as a gift, a housewarming present, basically when you move into the home. But do not, I repeat, do not buy a car, lease a car, or any of those things basically during this process. Anything else that you want to add when it comes to credit?
Yeah, especially
do or not do?
Yeah. With those new accounts, what happens is your length of credit history is also a factor on your credit report. So that as soon as you open up new accounts, new credit cards, new Bob's store accounts, new cars, your score drops. So what you thought was your score today isn't your score tomorrow. When you get close to getting a mortgage, the other thing that you really have to worry about is make sure that absolutely positively every single bill is paid on time. So that means every credit card bill, every car payment. You can drop your score anywhere between 60 and 120 points just by one new late payment, which will absolutely put you out of your house if you don't maintain positive credit history.
All right. Now, a common one that just popped into my head right now. What if someone has a common name like Joe Smith, and their father's name is Joe Smith also, and they might have an uncle named Joe Smith, or somebody down the block has the name Joe Smith and is similar? Is there a chance that they might be getting the report and they might be getting that information from somebody else and not just that person?
Absolutely. Yeah, that happens a lot. People think that the dictator of what's on your credit report is your social security number, and that is not the case. Collections a lot of times don't have your social security number, but those collections still end up on your credit report. So that's why we recommend, one of the reasons why we recommend that you always look at your credit report and make sure other people's information isn't on your credit report. It could actually help you, but really you don't want it on there.
Okay. So how far back basically should you look to see if there's any issues? Let's say you graduated 20 years ago, you were young, you had a credit card, you spent some money, and you forgot certain things. Certain bills are, they're piling up, and you're not aware of them at this moment. And now 20 years later, you're buying a house, and something from 20 years ago comes up. How far back can you look back?
Yeah, I mean, you run today's credit report, it's going to have all of the history that a mortgage broker would look at.
Mhm.
Negative items aren't supposed to remain on your credit report after 7 years from date of last activity. But that's the problem with some of these items is one is they can re-age. The collectors sometimes re-age the accounts. So this debt happened, date of last activity is 2010, but when the collector bought it, they bought it in 2015 and they use that as the date of last activity date, which isn't legal, but it happens.
Right.
Um, so like little nuanced stuff like that where, you know, collectors or creditors might not have the accurate date of last activity on your credit report, and that's what you're disputing, is basically errors that are on there that you don't that aren't accurate.
All right. Well, what's the common, well, you deal with people on a regular basis, on a day-to-day basis. What's the common number one misconception that people have when you're talking to them regarding their credit?
I think a lot of them just don't really understand the process itself. You know, and it's confusing, and it's meant to be confusing. Really, to demystify the process, it's the credit bureaus want you to have credit cards that are open. They want you to have credit cards that are active. They want you to have an installment loan. Really, the general rule is 3-1-1, which is 3 credit cards open, 1 car loan, and then 1 mortgage. You know, and that would be, you know, the ideal consumer. But people get out of control. People open up a lot of store cards and don't think that that's going to affect their credit. Sometimes people close accounts. Another misconception is, okay, I'm getting a house, you know, I got to close my open available credit. And that actually hurts a lot of people's scores. So people read articles where, you know, they might not see the whole picture. And they read an article and be like, oh, I have to close my old accounts. So they close all their accounts and then they see their score plummet and they wonder why. And that's because of the utilization ratio where, you know, you might be using the 1 card a lot, but you don't have any other credit that affects your utilization ratio on your credit report.
All right. Well, it sounds like whatever they're doing, they need to talk to the professional to give them better advice. So with that being said, if someone has some credit issues or have credit questions, how can they reach you?
Yeah, the best way is via email. So hopefully you can provide my email address on
Sure.
the contact information. Yeah, but just reach out. You know, I'm never gonna yell at anybody. You know, I try to be as personable as possible. VP stands for very professional, very personal. So, you know, hopefully we you know, and we're really here to help. We're you know, we understand, you know, credit wasn't taught in school. It's not like, you know, social studies was taught in school. You
All
know,
right.
credit was not. So.
All right. So what's a positive thing that you can say to the audience that's watching this about their credit, what they can do and stuff like that?
Okay. My positive, this is the pep talk that I always give is, you know, wherever you are right now, don't worry because you can always get better. The more time and effort that you put into it, obviously you can get better. But you know, whatever it is, take a deep breath. Don't worry about it. People that have great credit know they have great credit, and the people that think they have bad credit don't usually have as bad credit as they think that they have. You just have to look at it, pay attention to what's on the report, and know what you're doing right and know what you're doing wrong.
All right, great. All right, I have one bonus question. This
Okay.
one just came in. If somebody co-signs, can that affect somebody else is co-signing for you or vice versa? Can that co-sign their information affect your credit?
So if you're co-signing on a loan, the only information that will hit your credit report is that loan that is co-signed for, but that can absolutely trash your credit. If the person who you're co-signing for stops making payments, all of those late payments go onto your account, and you're also legally liable for the liability. So if So if they stop making this upon the car gets repoed, not only does all of that negative information go onto your credit report, but the original creditor can actually sue you for the repo. And one thing that people don't realize on repos is liability anymore. That is very far from the case. And there's a lot of lawsuits that happen because of repossessions where you give the car back, but you owed $6,000 on the car. And there's also repo fees and repo fees to actually repo the car, and then auction fees and all of that stuff you're liable on. So a lot of people think, oh, I gave back the car, I don't owe any money, and that is very, very far from the case. So in my first law class, the first thing my professor ever told me was never co-sign for anybody.
You know what? Those are sage words. If you're gonna co-sign, if you're thinking about co-signing, you really need to know who you're co-signing for, and you need to know that they're responsible. And basically, like all the things you just said, make sure that basically you're taking this serious, because basically it is your credit that's being affected. So you should be asking questions to the person that you're co-signing for. Did you make your payments? If you did, show me the proof. All of the above. You need to know everything, because your name is attached to this and your credit.
Yeah.
All right.
And there's a reason why companies ask for a cosigner. It's because they don't think the first person who's the first applicant is credit worthy. So that's why they're asking for a cosigner.
Yeah. So keep all this stuff in mind. All right. With that being said, again, what is the name of the company and how can they reach you?
C Kinslow, CKINSLOW at VPCreditRepair.com.
All right, awesome. Chris, thank you for doing this. Guys, thanks for watching. If you have any questions, feel free to reach out to Chris regarding credit repair, credit questions. If you're looking to buy, sell, or invest in real estate, give me and my team a call. Our information is at the end of this video. Thank you for watching. Remember to like, subscribe, and share this video to your friends and family. Talk to you soon.